Hello, my name is Kylie Smith. I'm an experienced audit associate at a public accounting firm here in Sacramento, California. And today I'm going to be talking about case 2-3 on page 98 of our textbook. It is called the tax return. So in the tax return case, an employee, Brenda, is faced with a really horrible decision after she's been encouraged by her tax manager to misrepresent a client's income on their tax return. Brenda's adamant that the lottery winnings should be reported as revenue, regardless of whether the client chooses to itemize their tax return or not. But the manager tells Brenda that it's only a one-time request. Other staff have shown loyalty to the firm by, in these one-time, one-off situations, misrepresenting the client's income. So by analyzing this case, what do we hope to achieve? We're challenged to not only recognize the ethical solution to this problem, which would be for Brenda to go ahead and refuse to misrepresent her client's income, but to bridge the gap between the ethical intent, and the ethical action. Through this exercise, we gain practice overcoming the reasons and rationalizations that serve as obstacles to ethical behaviors. So first, we're going to analyze the alternatives available to Brenda using Kohlberg's 6 stages of moral development, which are obedience to rules, avoidance of punishment, satisfying one's own needs, fairness to others, law and order, social contract, and universal ethical principles. So in terms of these 6 stages, in those pre-conventional stages, her primary focus is to keep her manager happy, avoid punishment. In that case, she would probably just do whatever her manager says. In the second pre-conventional stage, Brenda would be acting in her own best interest. So if anything, to refuse her manager's request would harm her reputation or her career with the firm, she would probably just go ahead and do whatever her manager suggested. But there's a chance that she would go ahead and refuse her manager's request as long as it was in service of her own self-interest. In the first of the conventional phases, fairness to others, Brenda might pursue what is in the best interest of her coworkers or her clients out of a sense of loyalty or wanting to be liked. So she also might not refuse the manager's request out of fear of retaliation. In the fourth stage, which is the second conventional stage, law and order, Brenda would have more of a respect for professional tax standards out of respect for the law. She'd feel a sense of responsibility for maintaining social order and the law. And so even if she frustrated her manager or her client, she would probably go ahead and make the ethical decision in that case. And as the same is for in the social contract phase and the universal ethical principles phase. In these phases, the first of which she would carefully weigh the circumstances and decide upon the outcome that would be of greatest benefit to society. And in the last phase, universal ethical principles, she would make decisions based upon principles regardless of any laws, customs, even her own self-interest, and she would just be making decisions that were universally applicable and appropriate to all cases. So in that case, she would never consider misrepresenting the income, no matter what the consequences were. So part 2 of the question, assume that Brenda has no reason to doubt her manager's claims and it's only a one-time request. Should that make a difference in what Brenda decides to do? The answer, of course, is that it should not make a difference. The question presents us with the first reason or rationalization or the first obstacle to ethical behavior. Should an isolated incident prevent us from engaging in ethical behavior? Essentially, we're trying to ponder if we live with the occasional unethical decision, as long as we have plenty more ethical decisions to kind of balance them out, is that right? And the answer is no. We can't fool ourselves into unethical actions just because they're a one-time thing. And if it is just an isolated incident, then that's a great opportunity for us to make a stand. If Brenda's employed at a firm where most staff are happy to prove their loyalty in that way, then it's Brenda's responsibility to contribute to an ethical company culture. And finally, if it's just an isolated incident for Brenda, she should still recognize that her client's paying good money for professional guidance, and that client deserves to have a tax preparer act with professionalism. So giving the client special treatment or enabling them to break the law just kind of sets a dangerous precedent, and the firm is basically just kicking the can down the road. So the tax return case, question 2, assume we have decided to refuse to emit the lottery revenue. How do we respond to the reasons and rationalizations of the manager? So just remember that any reasons or rationalizations presented by the manager would be obstacles to ethical behavior. And the best way to overcome those obstacles is to anticipate what they might be and then come up with ways to counter the arguments. So according to the text, there's a few different types of reasons and rationalizations. We can go ahead and come up with an example of each one that fits the case, and then maybe some solutions. So moving to materiality, maybe the manager would say that lottery winnings are barely large enough to report in the first place, or that there's no chance the client will be audited. Responsibility, you don't have to worry because I'm the one suggesting the adjustment. I'm the one telling you to adjust the return. In order to developing a compelling counter-argument, we want to consider what's at stake for the key parties and what levers we can use to influence the manager into changing his mind. So my strategy would be explicitly state the nature of the rationalization and present a strong argument on the basis of the rationalization only, and then attempt to address factors that are of importance to the manager to try to change their mind. So strategy 1, conquer the obstacle, and strategy 2, appeal to the manager's ethical judgment. So one way to conquer the obstacle, that other staff are willing to be flexible in such situations. That's the expected or standard practice obstacle. I would refute that by saying, I can't just make an inappropriate adjustment because other staff are doing it. It's disheartening to hear that the ethical culture of our firm is struggling. If I don't take a stand, it will set a bad example, and then the next staff member will be faced with the difficult decision. For the materiality obstacle, he might say that the lottery winnings are barely large enough to report in the first place. I would conquer that obstacle by saying that it is such a small amount and we can't let our clients bully us into breaking the tax code over such a small amount. This year the winnings are small, so we have to set a precedent because next year they might be bigger. So we can move through these different examples of those obstacles before beginning to address those motivations and levers. So to appeal to the ethical judgment, to understand what's at stake for the client, we have to put ourselves in their shoes. The client is trying to avoid having to pay taxes, so it's easy to see that the request is driven by financial motivation, and we can use that motivation to reason with them. For example, now that we have a better understanding of the tax code, we can plan ahead for future years so that you won't be surprised with a tax liability. Or let's discuss the option of itemizing your return as a strategy next year to provincially avoid paying taxes on the winnings. Think about how much money you could save. And then to appeal to the manager's moral judgment, you might say something like, I know you're concerned with losing this client. If we aren't firm with our clients, they'll take advantage of us. We need to try to reason with him now so that he doesn't understate his revenue in future years. They might be facing downward pressure from a partner to misstate things or to retain clients at all costs, in which case he would say, let's discuss this issue with the partner together. I'll take full responsibility for refusing to adjust the return, and we can clear up any confusion together. Or I know you're probably feeling pressure from the partner, but this client's not worth risking our jobs, licenses, or reputations. So to answer the third question, what should Brenda do if she decides to go along with what her manager suggested, but then runs into a similar issue with the same client a subsequent year? If I were Brenda and I found myself in the same situation, I would have to immediately elevate the issue to the partner. If I was told to admit the gains again, I would attempt to make a very comprehensive argument, but if unsuccessful, I would have to submit my resignation because no job is worth compromising your professional judgment or ethical behavior over. Thank you very much for watching.